number two, chasing past returns doesn't always work. And let's pull up the small cap funds. With years of having conversations with Feroz, I know that he's still very much a big believer in active management. He's not one for passives. But Feroz, Mohit does raise a very valid point, right? So then where do you stand on the active-passive debate, the right mix now?
I've done my mistakes. I came to that conclusion that active ka khatam ho gaya time. And I'll tell you how I got a rap on my knuckles 3 times in my career. Okay, and so many of my clients. I'll come to that. See, firstly, on the courage bit, see, if there was just a 7th April dip, I wouldn't say courage helped. Market languished out of the last 12 months at 22,000-23,000 for 7-8 months out of those. If it just went to 21,700, it stayed there for 1 hour and then it closed at 22,300 on the Liberation Day as called by Mr. Trump. That people didn't buy at 21,700, I guess, I know, right? But if you give you 4 months and you abhi bhi aap himmat juta nahi pa rahe ho, to aankade dekhne ka mauka mila. You got the time to see. Surabhi, at least 12 times, 16 times, right? Then you bring in some degree of mathematics. Second, and when do you get the courage also, I want to say. How do you get courage? Now, my clients are actually courageous. Why? In COVID year, Anand Rathi was one of the few distributors which purchased equity, whereas 1.5 lakh crores was sold from equity. It's because I tell the client markets will fall 15% every year. Before taking the check, if I said 2 lakh Sensex, if there's 5% fall, he'll panic. If I say every year it falls 14.73, that is the fall is there. Now, if you still have the courage, cut the check, otherwise keep the money in an FT. Then it's difficult to get the money, but when the money comes, it stays. How do you get courage also, I'm telling you. Look at the data. Now coming to passive and active debate. Okay, passive, I wrote off active practically. If you saw any of the shows in 2019, my model portfolio had underperformed Nifty by 9% in 2018.
And it was largely based on active funds.
It was all active funds. So
the
kind of hammering I got from my clients, I itself said, yaar, ye active chhod do. Agar naukri rakhni hai. Right? This is the kind of mentality. And then I was almost gearing towards that and saying that passive is the way to go. 2020 came. I made alpha of 12%. Then came 2021, alpha of 8%. 2022, negative alpha of 4%. 2023, FI24, okay, large part of FI calendar year 23 because I see FIs, 14% again, beating Nifty. So this has happened several times that you almost say that this year says that actives are over. There are 4-5 years. Just go look at the data. Worst active years, worst time where out of the 967 total funds, 665 active funds, any year where there were minimum beating, the next year could have been the year back for active. And then I backward calculated what is making this happen. In years where FI outflows are there, becomes difficult for active to beat it. Right? That's one thing which seems like a hypothesis worth testing.